All right, it's talk time now, and we'll be talking about the CBN's recent action on about 9 banks, or let's say 8 banks now, from foreign exchange trading. We're joined now by Head Research Express Discount Asset Management, Oluwashina Olubu. It's good to have you join us right now.
Good morning.
Thank you.
Good to be here.
And also joining us from Abuja is Professor International Economic Relations. Thank you so much for joining us on the show, but we'll of course get back to him as quickly as possible. All right, back to you here in the studio, Shino Olubu. Now, the CBN barred this 9 banks because of this rather serious infraction of not remitting, some $2 billion or so dollars to the TSA. How was this possible in the first place?
Thank you very much. That is not. It's not a new thing. Banks are supposed to be custodians of funds, and when they get these funds, because of their primary role of financial intermediation, what banks do basically is to get funds and channel the funds to where they think that they are needed, just so they are able to make spread between what they get from depositors and the users of the funds eventually. So when those funds were got, the banks were not under obligation to keep those funds without being used. So it is normal that when you get funds, whether it is Naira funds or dollar or whatever, you are supposed to look for risk asset, that's loans, so that when you put those use into use, those funds to use in form of loan, you can earn some money. So when you do that, it's important for them. So those are the things that the banks did when they got the dollars. So unfortunately, TSA came and the banks were supposed to remit those funds, but the funds that they were supposed to remit had been used. So the banks wouldn't have known that the nation would be in this kind of mess as far as foreign exchange is concerned. The banks would have thought that if they use the funds then, by the time they would need the owners of the funds will need it, they would be able to source for exchange rate and then pay back to the. So it's quite possible. It's not surprising that. By the way, the banks they've reacted by saying that they've engaged with the CBN to tell as a matter of fact, that they had a repayment schedule. Because it's just not considered.
Yeah, but when you say that this was always the case anyway, but this is at the time, this is happening when government says, look, every fund, every MDA fund should go to this common purse, the TSA.
Yeah.
I mean, you wouldn't expect that this would still be happening.
No, what I'm saying is
they did not remit those monies, well, especially that, it's specifically that of the NNPC.
Oh, they said, now, that was not the only money that NNPC had with them. NNPC had Naira fund with them and dollar fund with them. Now, the Naira equivalent of it had been remitted, but for the dollar, it's just not practicable that with this kind of situation, when even the CBN is having issues with managing the FX market, that they will be able to, a bank will be able to just pay $500 million from where?
No, but let's have an understanding here. The laws are clear as to when the monies from NNPC are remitted to you, there is a period of time by which you should remit the money to an account. The banks are aware, NNPC is aware, the government is aware, isn't it? Isn't it?
It's important for us to put it into perspective. Now, laws are laws and they are meant to be obeyed. But again, we need to put things into perspective. Things are not like they used to be 2 years ago, not even a year ago. In terms
but
of
in this present situation, now, some banks complied and others did not.
They are not newly got funds. They were backlog of funds. Now, if those funds were just gotten and they were not remitted, fine. But banks were saying that we had these funds, we even have Naira equivalent, and they told the CBN, will you sell dollars to us? It wasn't like they were not willing to pay.
But certainly some banks paid in Naira equivalent of the amount of money in dollars.
No. They paid dollars. But
some of the banks said they actually paid the Naira value of it.
I understand that some of the banks were one of the banks that were banned, one of them was taken off almost immediately.
Yes.
And that was
because
they didn't even pay. They had there was an indebtedness by the government to the bank. We also told the CBN that CBN should net off the indebtedness, of the government to them. So there was a balance that they just paid. That was pretty easier for them. There's another bank who is saying that NNPC is owing us so much in terms of loan. Let's net it off. But to get that amount, liquidity from this present market.
Well, that seemed to have been an arbitrary action on the part of the banks, but we'll come to that. We have also joining us from Abuja studio, Professor of International Economic Relations, Jonathan Aremu. Good morning and thanks for joining us on the show.
Good morning to you.
Okay, so we'd like to get your first comments to this CBN move to bar 9 banks and then of course eventually 8 because one has remitted the so-called funds that were held back by the banks. What's your take on this action in the first place when there was a law, or there is a law that says banks, MDA's monies should go to the TSA, that's the Treasury Single Account. And in the midst of all of this, these banks are doing what they're doing.
Well, I hope I'm hearing you clearly, but Central Bank approved these banks as authorized dealers, and therefore Central Bank has the right to be able to control those he authorizes. So the banks are given the authority to participate in foreign exchange market, and therefore there are guiding rules. If they violate any of these rules, Central Bank has the right to withdraw the authority that has given to them. So what is there under this kind of situation is that they find them not working in line with the rule that was set down, and then Central Bank say, okay, if you cannot comply with the rules, then you can participate in foreign exchange market. Simple.
Yeah, but Professor, coming down to the issue of taking them off the Forex market, we see that customers and businesses and individuals who are contributing to the economic activity and all of that, they are the ones bearing the brunt. So how appropriate is this sanction against the banks by taking them off the Forex market?
You see, we can't blame Central Bank. I'm an offshoot of Central Bank myself. I work in the research department. And Central Bank has a procedure of getting things done. The bank has, and they know what to do. If they refuse to do what to do, at this tight economic situation, they should be given, the door to move out a little bit, so that we can actually manage the economy properly. The essence of TSA, that's the Treasury Single Account, is to ensure that money that are available, particularly the income, the revenue, and the various resources of the government, are better channeled, and there's no more wastages. And we are always clamoring for change, and the change has come. So the bank cannot be doing the same thing at the same way. You see, I'm aware that quite a lot of this money that were put in this bank, particularly from the one that dividend from liquefied natural gas, Nigeria LNG, some of them are actually invested. Well, if the law allows them to invest, it's good. But again, they should actually envisage a situation in which there cannot be rollover of this money, all the time. The government needs this money, and then they must have been warned. If Central Bank did not actually let them know that this money have to be returned at a particular time, then that's a different matter. But this is a money belonging to the federal government, and under a single accounting system for the purpose of consolidation. I think it is better that the bank actually perform according to the rules. Yes, it's going to impose some sort of problems on the customers of the bank, but quite a lot. We are told that UB have actually remitted its own money. The other banks are trying to see what they can do to remit the money back. So, I think they should actually comply so that we can use this opportunity of a change to be able to make sure that everything within the Nigerian economic system is perfected.
Gentlemen,
there cannot be continuous rollover of investment when we need the money.
All right, just hold on, gentlemen. Now let's shed more light on this. Of course, last week, the Central Bank of Nigeria suspended 9 commercial banks from the interbank foreign exchange market operations. The offense, withholding more than $2 billion belonging to the Nigerian National Petroleum Corporation, NNPC. and the Nigeria Liquefied Natural Gas (NLNG). But less than 24 hours, one bank had its ban lifted following their remittance to the CBN.
And the reconciliation of their accounts generally. But this act goes against the directive issued by President Muhammadu Buhari last year, September, that all government MDAs close all public sector accounts in commercial banks and transfer through the Treasury single account their balances to the Consolidated Revenue Fund at the Central Bank of Nigeria. Now, under this agreement, or arrangement generally, banks are required to remit government funds held on their books to a single Treasury account, the TSA.
Now, after a report was made by the affected ministries to the president, the CBN was ordered to follow up on the matter, after which the 9 banks were mandated to move the monies to the Treasury single account. At the full implementation of the TSA in 2015, the CBN had warned that banks that did not totally comply with the TSA remission plan faced possible fine and stringent punishment, such as possible suspension from the Forex market. Okay, let's just hold it there for a second and bring in our guest here in the studio, Shina Olubu. Okay, so the banks, are to remain barred until they remit these funds to the TSA. And that seems to be where it ends. One would have expected that there should be some kind of punishment for this infraction, as the law states. And it doesn't seem that these banks may be punished.
When you say punishment, I wonder what punishment there is, because when you buy a bank from being a part of FX market, even if it's just for a day or two, the bank stands a risk of losing a very large chunk of what should have been its income, foreign exchange trading income. Because what the banks do is to open LCs for customers. They do all sorts of transactions using the FX. So when they're not able to access the market, what you have done is so that alone is a punishment. Now,
but the banks should have known that in the first place.
Let me say this, Ngozi. Yes. I'm big on people complying with laws and orders, but we cannot shy away from the truth of the matter. The banks, when they got some of these monies, they match it against foreign exchange, dollar loans and advances. Some of these things went to power firms, all these power companies. Yes. So, and these power companies have not been able, they've complained of discos not giving them, paying them money. Discos, on the other hand, have complained of customers not paying them money. And a number of these debts are with MDAs. Yes, ministries, departments, and agencies of government. So when you want to do things, it's important for you, unless you're telling me that the laws are more important than the way the economy should run. Now, the laws are supposed to help the economy to thrive, not the other way around.
Yeah, now, but let's have a better understanding here. When this directive was brought down by the president, as the case may be, and you said these things were not things that just happened today. They've been there for some time, as the case may be. Now, if we have to put things in perspective, shouldn't the government know when this directive came? The banks knew that there's going to be an issue based on the time frame that we're given. So we should communicate this to government before any kind of sanctions or any kind of punishment is meted out. Shouldn't the government know that?
I'm really surprised. I must be frank with you, because the CBN came out like 2 weeks ago to say that, to make statement to reassure the public that the banks were healthy. I'm sure.
Yes.
Now, for me, this is counterproductive, because there should have been a better way of handling these things, because the banks have balances with the CBN. The CBN knows how strong or otherwise every bank is. The CBN knows that the banks have these monies with them. So if the issue is about getting the money and not minding in what currency, tell them, let them pay the Naira equivalent. So, but what I see here is that the CBN wants them to pay in dollars. And between you and I, the question is, the same economy that has benefited from the oil price being comfortably above $100 per barrel, I mean, it's the same economy who has been struggling with thankfully, we've seen a level of recovery in the oil price in the last 1 or 2 months. Is hovering around $50. But you and I know that this was the same for a large part of the year. It was hovering around $30 per barrel.
Indeed.
Okay. Plus the fact that we have been seeing bombings, which means that even when the prices have increased now, we are yet to benefit from the increase in price because we are losing on the part of production. Don't forget that the budget was made based on $2.2 million per barrel. Right now, we are around $1.5 million per barrel.
Yes, indeed. And that is
dollars barrels per day.
That in itself is in the public arena. But let's bring in Jonathan Aremu. How watertight really is the TSA in preventing, those kinds of infractions or breaches that were the whole idea behind the TSA in the first place, and really going beyond what these banks have done? Is there something wrong fundamentally with the TSA idea?
I don't see anything wrong with the TSA idea. I quite understand that there will be some hardship. The bank that have the greatest exposure to this kind of money, which is UBA, has equally paid back, right? And First Bank, another bank, are trying to see what they can do to pay back. You see, this bank should have been able to see some of these things before now. That this money that I invested, the dividend from liquefied natural gas, that they are rolling over on investment, sooner or later this money may have to be called back. It cannot actually continue to be rolled over to eternity. The economy, all of us know that we need a lot of foreign exchange. And it is inavailability of foreign exchange that is causing Naira to having a free fall. So if government said, okay, we want this money to come back, there is no offense in that. So there is no problem with what central bank is doing. The only thing, there will have been some signals to the bank that, well, this money cannot continue to be rolled over. The time is coming when we are going to need this money. Maybe, and I think that central bank will have passed certain instructions like that. I mean, just as I told you that I came out from the system, and at the time, central banks always say, okay, if you cannot actually bring this money, then you can participate in foreign exchange. And that is why a bank that was prepared, which is UBA, was able to pay back. So, to your question, I don't see anything wrong with the TSA or with what central bank has done. It's rather unfortunate. The impact on the customer is much. But let us get this right. We must be able to actually find a way of consolidating the revenue fund in this country under the TSA. We must be able to do things in a better way than before. So this is the area in which the bank has to be innovative in the idea under this change system kind of government under Buhari administration.
All right, Professor Aremu, in this situation right now where the banks have found, the 8 banks now find themselves, how likely is it that they will now turn to the parallel market to source for foreign exchange?
It looks like
all right.
I was hearing you before the team went.
Yes, Professor. Let me ask the question again. I was saying that where the banks find themselves right now, how likely is it they will turn to the parallel market to source for foreign exchange?
It's off again.
Okay, but no, let me ask him one more time because I can hear his voice generally. Now, Professor, I'm asking that these banks have found themselves where they are right now. Is it most likely they're going to turn to the parallel market?
Yes.
Will they turn to the parallel market to source for foreign exchange? What's the implication of that?
Unfortunately, it's still breaking.
Okay, I had the beginning of the question. Let me just answer that one because that's okay. Yeah. You see, parallel market is not a substitute to letters of credit. Parallel market is not a substitute to letters of credit. Letters of credit is the main method of transacting import and export, which is accepted within the international scene. So there is no way of substituting a parallel market, but a way of getting things done is that way they just have to see what they can do to resolve the problem. That's why at the bank end, at central bank end. But if a particular bank has actually come out to, say that we have remitted all the money, what I'm saying is that other banks should actually try to do the same thing. Else, you are going to be putting sanction on the UBA that have returned the biggest amount of money, which is $530 million. Because if they know that you are going to forgive them later, then why did they have to return their own? They will have used it or keep it where they invested and earn some level of interest. So I think what the rest have to do is, as much as possible, to make sure that they get the money back, and then we henceforth operate a way in which nobody will be punished, the economy will be stabilized. But there is no substitute to letters of credit. You cannot say that because the letters of credit opportunity is not coming up, then we have to go to the Bureau de Change to be able to source money for transacting international trade. It has its own disadvantages, particularly with the guarantees that actually accompany letters of credit. The same kind of guarantee does not accompany transacting money in a parallel market to buying goods from overseas. And there are certain level of goods you cannot even do that.
Okay,
The
I guess
person exporting the good will not even allow that.
Okay.
All right, I guess Professor Aremu has answered the question. I was about to, throw that question to you too. I mean, what are the likely implications if the banks were to resort to the parallel market for Forex?
I'm closing the door at against the banks. For me, asking whether they are going to approach the parallel market can be looked at in two ways. The first thing is it to get funds to pay back? If yes, if that's what you mean, then that's not an option. Because imagine taking 1.5 billion demand to the market. It's just the exchange rate is going to blow. Then we do that from the perspective of cost, even to the banks. The banks, the question is how much was the fund? What was the value of the fund at the time they got it? So imagine going to the parallel market to buy it for 414 naira. That's not an option for them.
That will be suicidal.
The second thing is to look at it from the angle of, is it to approach the parallel market in order to service their customers who need credit, which is what Professor said, that LCs, you cannot do LCs. The only implication that can have is customers that should have come to you for LC, for helping them to raise LCs, and would now have to look for autonomous sources. If they cannot approach their other banks, for those who have other banks, then they would have to look for parallel markets. I don't know if I get to understand. Yes. So instead of doing the LCs, they will have to go and source for the foreign exchange. By the way, that has been a practice in the last few months. A lot of the demands that should, because even the 41 ban items have gone to the parallel market anyway. So they used to access LCs before now. So we just see that the demand in the parallel market will keep being bloated.
Let me ask you a layman's question. You know, the fact that these banks were able to withhold about $2 billion in the first place, one almost, thinks, is there a possibility that the scarcity in Forex that we have going on now may even be artificial at the end of the day? Is there a possibility of that happening?
Now, first of all, the 2.1 billion being referred to is not even in the custody of the banks, like I told you. But the reason we're having this discussion is because it's a dollar-denominated transaction. If it was naira, you don't typically know whether the naira, because that the demand in the parallel market will keep being bloated.
Let me ask you a layman's question. You know, the fact that these banks were able to withhold about $2 billion in the first place, one almost, thinks, is there a possibility that the scarcity in Forex that we have going on now may even be artificial at the end of the day? Is there a possibility of that happening? Now,
first of all, the 2.1 billion being referred to is not even in the custody of the banks, like I told you. But the reason we're having this discussion is because it's a dollar-denominated transaction. If it was naira, you don't typically know whether the naira, because when monies come into the banking system, it loses its identity and then it falls into April. Nobody knows whether what I got from Ngozi is what I'm giving to Michael or something. Because the reason we have this is because it has to be remitted in dollars. And it's not conceivable for me as an economist to think that a bank will get money and keep it. What for? The business of a bank primarily is creation, is financial intermediation, which is getting money from the surplus unit and giving it to deficit.
But would you say the banks have really been doing that? I mean, actually servicing the real sector. Don't forget that one of the reasons why, the bank's exposure is quite high, because they've been involved in the oil and gas, sector, which ordinarily wasn't supposed to be their business in the first place.
How do you mean? The oil and gas sector is part of the economy. So the money market is supposed to be the engine, the blood stream in the real sector, and the oil and non-oil sectors of the economy alike have the same rights to access it. See, the truth of the matter again is that it is typical, and it's not peculiar to Nigeria, it's all over the world. Energy, power transactions are they're usually capital-intensive transactions. They are usually denominated in dollars. That is why typically most of the dollar transactions will always go to power transactions. The reason we have, if the oil and gas sector is not going through the troubles it is going through right now, we probably will not be saying all this.
Okay. Now let me go to Professor Aremu here. Professor, this monies, this $2 billion point something dollars we're talking about, most of them, in fact, all of that money is not within the geographic expression of Nigeria. This account is held outside the economy of Nigeria, and it is owned by the Nigerian government, owned by the Nigerian banking system, owned by the Nigerian companies, as the case may be. How beneficial to the economy at this critical time is it to hold that amount of money outside the economy of this country?
Yeah, I got the earlier part of your question quite right. The later part, let me just answer that. That how beneficial is for the bank actually allow this money to be held overseas. You see, just as that man just talked about, banks don't keep money in their vaults. They invest this money. And when investors come and say, oh, I need this amount of money, what do you want to use it? Want to use it over there, want to use it over there. Once the project looks viable, they are going to commit money into it. And the investment can be on short term, it can be on medium term, it can be on a long term. Now, unfortunately, quite a lot of the money, particularly dividend of the NLNG, which were routed through some of these banks, some of them are given on short term, some of them on long term, some of them on medium term. Now, let's agree that maybe an investor came about 2 months ago and requested that he needed this money for 8 months. Right? And this money has been given out. Before this money can come back, it's going to be about 6 months. And government is now saying, okay, bring back this money. It's unfortunate that they are requesting that they have to bring back this money because they are not aware that this money will be recalled so soon by the owner. But again, it's part of the financial intermediation which the bank must be ready to face, just as that man said. That in financial intermediation, when you are actually giving money out, you have to consider the time when the owner of the money said he wanted it, he can no longer roll it over for investment again. So whether the investment is overseas or within the country, that is not what matters. You can invest any part of the world. That the money is outside just because of the fact that we need substantial foreign exchange in Nigeria, and that's why we are saying, oh, why so much amount of money overseas or all this? Now, if an investment opportunity is overseas, why can you not use it? Because it's going to bring future returns apart from the capital invested. So the issue is not why the money is over there, but the issue is that how did the owner of the money said he wanted it? If he wanted it early enough, well, it is now within your own prerogative to be able to ensure that when you are investing, you have to consider the time when the owner of the money will say he wanted it. The federal government say we wanted, and they should see this one coming. Immediately the TSA came into operation in September last year.
All right,
they
Professor
should be able to really know that
government
government can say they want this money not to be rolled over.
Okay. Want to say thank you so much for your time and, of course, the insight you've given us this morning. Professor of International Economic Relations, Jonathan Aremu, very quickly to our guests in the studio. let me go back to the issue of the TSA that I'm still, just wondering about. Now, are there any risks involved, for Nigeria? Let's assume, that the global shock that happened just before the TSA was put in place. If we had the TSA in place at that time and you had this global shock, how vulnerable would Nigeria have been?
Global shock of what year? Did you mean the one of 2007?
No, the most recent one, where, of course, our oil price has gone down, totally down south.
Thank you very much,
yes.
Ngozi. For me, see, money is a reflection of what happens in the real sector. Whatever you are seeing in the banking sector is the story of the real sector told in another way. By that, what I mean is this. Even if we add all the monies in the account of the president when it happened, we still will have been hit like we were. Badly. The reason is simple. This economy is standing on a pole, not a tripod. Now, some economies stand on the tripod where you have oil, you have tourism, you have agriculture and all. But this economy, as long as I know, has always stood on a pole. And when the pole was shaking, it became a problem. So we cannot
there was no
run
alternative.
So it's been monocultural all the way. And the world diversification has always, as long as I am, we've been saying that.
Okay, we'll have to leave it there. Shino Olubu, financial analyst, thank you so much for your time on the show this morning.
Thank you for having me.